What up YouTube, Salvador Brigman here. Welcome back to the Crowdfunding Demystified YouTube channel, where we talk about how to get funding for your startup, for your new business idea, how to get funding for that new cool e-commerce product. We talk about crowdfunding and also other types of funding. So today I actually want to compare crowdfunding with venture capital dollars. On the outset, if you're just new to startup financing or getting funding, you might think that crowdfunding and venture capital are like the exact same thing, but really they couldn't be more different. Well, yeah, I mean, both are ways to fund your company. There are some major and stark contrasts between these two, and I want to get into that today, along with, I guess, one or two of the similarities. So the first major difference that I want to outline here, the reason why crowdfunding is so different than venture capital, is the actual size of the funding round. So with a crowdfunding campaign, typically you might see on average that on Kickstarter a campaign is going to raise about $10,000. That's across all of the different categories. So film, dance, theater, music, technology products, gaming, tabletops. So there are a lot of different categories on Kickstarter. The average raise is about $10,000. Now, focusing more on like technology or focusing more on gadgets and gizmos and design projects, we tend to see campaigns that do a lot better in the financial raise. So we might see campaigns that have raised $200,000 or $500,000 or $1 million or $10 million. So we're naturally, because of being in the media landscape, because of seeing all these different campaigns on Facebook or being written about in our favorite tech publication, we do see campaigns that have a lot of success on Kickstarter and Indiegogo. But still, that is nothing in the way of how much you will raise from a venture capitalist. So venture capitalists would never dabble in the realm of like 100K or 500K or 600K. They would never even get there. That's more reserved for angel investors. I also have another video on how to get funding for your startup, where I talk about the various different types of investors and sort of how this scales outwards. So once you get into the larger funding rounds, I'm talking, $5 million, $10 million, $20 million. That's really when you start to encounter the VCs. The venture capitalists will put large amounts of money into a company depending on the funding round. So it could be Series A, B, C. Typically, they're not going to be really involved in the seed stage round, which is going to be, under $1 million, I would say, is really when you're focusing more on the angels, the family and friends, etc. So right from the outset, these are two very different levels when it comes to funding. And that's the first difference between crowdfunding and venture capital. Now, the second is the actual expectation on that money. I think many new entrepreneurs out there tend to think that like winning, it's like to get money, to get funding is like winning the lottery. And that's the exact wrong way to think about it, because when someone gives you money, it's not because they're just giving it to you, it's because they expect something back in return. It creates a tremendous amount of pressure. It creates a tremendous amount of expectations when someone gives you money, because then they expect you to produce growth. They expect you to grow your company and at a certain point either sell that company or go IPO, do an initial public offering so they can cash out their shares and their investment in your company. So the second you take money, you can think of it as a runway. Like you really need to start running on that treadmill, producing growth, working hard, working 60 and more hour weeks, making sure that you're working hard so you can produce an exit for your investors, the people that are believing in you. So the expectations when it comes to crowdfunding are different than with a venture capitalist. With crowdfunding, we're just talking Kickstarter and Indiegogo, the people who give you money are not gaining ownership in your company in any way. Instead, when they give you money, they're expecting something back in the way of a pre-order of the product. They want to be the first to own one of these cool new watches or one of these cool new handbags or whatever it is that you're making. So they're expecting that, 3 months, 6 months down the road, you're going to ship out this product to them and they're going to be able to open it at home and wear it and show it off to all of their friends. Their expectation is that you're going to use this money that you've raised in order to fund the initial production round of the product. When it comes to venture capitalists, they're not expecting things like a pre-order of a product. Instead, they're expecting that you're going to use this money to fuel the growth of the company, and that's going to increase the value of their shares in the company. So they actually have a physical ownership in your startup company, and at a certain point, there will be what's called a liquidation event. In a liquidation event, either by selling your company, someone buying it, having an acquisition or an IPO, they are then allowed to cash out their shares to sell them to other people, and at that point, their shares are worth more money than when they bought them initially, which is the profit from the investment or the ROI from actually putting capital into your business. So their expectation is you're gonna be working day and night really hard to grow the value of their company over time. That's their expectation. You do have, as a subset of crowdfunding, equity crowdfunding. Now with equity crowdfunding, an individual who puts money into a startup will actually gain shares in that company. So when it comes to crowdfunding, you have a Title III or regulation crowdfunding raise, you have a regulation A+ raise, you also have a regulation D crowdfunding campaign. If you want to learn more about that, I also have another video which goes into the differences between equity crowdfunding, the different regulations and rules that you can raise money under. But suffice it to say, right now at the point I'm making this video, the majority of financial raises are happening on Kickstarter and Indiegogo. They're being used as pre-orders of the product. When you raise money there, you're getting access to this whole new base of customers. You're getting the funding to fund the initial production round of the product, and in some cases, people are running equity crowdfunding campaigns where they give access to those individuals' ownership in their company. With the VC, expectation is growing the company, eventually you're able to cash out and get money from your shares of the company. So that's the second major difference between crowdfunding and venture capital. Now the third major difference, and we're getting a little bit more nitty gritty here, but I really want to share and shed a light on this. The third difference is the onus on you as an entrepreneur, and also how you're going to be able to make this happen. So when you're running a crowdfunding campaign, there is a way to engineer success on Kickstarter, on Indiegogo, when you're running a crowdfunding campaign. I've documented this for the last 5 years. I have a book out there called The Kickstarter Launch Formula. I also have an online course called The Complete Crowdfunding System. And what I teach with these products are that in order to have a successful campaign on Kickstarter, you need to build in the hype. You need to have a pre-launch plan, a way so that when you actually go live on Kickstarter, you have already a crowd of people that are clamoring to get your product. By building anticipation, by sharing your story, by building different assets like an email list, you can make it so that you have an explosive Kickstarter campaign, and that is what is required from you, the entrepreneur. Of course, you also need a good presentation, you need a good product, you need a good pitch video, you need to put together a campaign page and have attractive rewards that people can claim when they back your product. So that's what the onus of you as an entrepreneur is, to engineer the marketing, to create the prototypes, to know how to do the mass production once you are funded. That is the onus on you. Now when it comes to venture capital, you're going to be spending most of your time networking with venture capitalists, networking with angel investors, trying to get introduced to venture capitalists. It's an entire process. This is a 6-month process where instead of spending time growing your business, you're going to be trying to raise capital from these venture capitalists. So what you're going to be doing when it comes to this is pitching people. You're going to be doing presentations, you're going to be answering questions, you're really going to try and sell this dream to the venture capitalists and the people that are representing this larger fund of money. And what you're trying to do here is basically, number one, increase their certainty that by betting on you, it's going to be a good decision because the market is really large, because you have the right team in place, because you can scale effectively with their money, and you can begin to grow even faster because you already have maybe product market fit, and you know that this audience is just loving your product, and all you really need is the money to begin to light a fire under this company, and then the company will be worth much, much more. So it's a good idea to get in early. So a lot of your time is spent one-on-one and also doing presentations in order to convince these venture capitalists of the value of your business. Now, the last thing I want to say when we're comparing crowdfunding with venture capital dollars are how your life is going to change. And make no mistake, by taking money in any sort of fashion, it is going to change your life either for the better or for the worse. So let's talk pretty candidly about how your life is going to change. When you raise money on Kickstarter or with a crowdfunding campaign, you're going to have access to, like, let's just say 2,000 new customers. 2,000 people that are supporting you with your venture, that are expecting they're going to ship out this product to them in the future. So immediately after you're done with this campaign, you celebrate because you did a great job, because you got a lot of media attention, probably you got a lot of success, and that's hard to do. So you celebrate, but then the real work begins. You have to actually go through this manufacturing process. You have to ship out all of these rewards. Also the variations in the rewards, maybe different colors, different sizes, what different people have claimed. You have to send out surveys to get the customer information. And basically, this is the fulfillment process of the crowdfunding campaign. And while you're going through this fulfillment process, you also have to do customer service, because people are going to be asking you questions like, why hasn't the product arrived yet? Or, oh, is it going to include this or that? Or, you know what, actually, I kind of want this product at this address. Can I change my address that I gave to you guys? So you're going to be dealing with customer service in the comment section on Kickstarter. You're probably also going to be getting emails from your customers. And finally, there's going to be an expectation that at a certain point, you're going to ship out this product to all of your backers, and they're then going to be able to judge whether or not it is a good product. They're also going to give you very valuable feedback on that product, things you can improve in later iterations, new product ideas that they might have for you. So it's a lot of customer discovery, a lot of figuring out, actually making this product and shipping it out to people. That is what's going to happen. That's how your life is going to change after you have a successful campaign on Kickstarter. And then you're gonna have to figure out actually how to get this to the people and ship them, either going with a fulfillment company or doing the fulfillment yourself. So it's a really exciting time. It's also really cool knowing that you're like impacting so many other people around the world. They're gonna own a physical version of your product they can show your friends. So it's a really exciting time. It's also a great marketing opportunity. You can go out there, you can talk about your successful campaign. You can come on podcasts like mine and share your tips and advice. So there's a big marketing opportunity and a way to get traffic to your website using something like a Kickstarter launch. Now, when you're doing a venture capital raise, after you take money, you then have the expectation and the pressure to produce growth with your company. You're essentially taking on a partner. When you're giving away shares of your company for investment, you are taking on a partner in your business. That venture capitalist might want board seats or board positions. They might want you to restructure the company. They might have their own thoughts on ways that you can grow or people that you should be introduced to. Or maybe they want you to work with another company in their portfolio. Since their goal is to get you an exit and get an ROI on their money, they might also at a certain point want you to sell the company to another company in their portfolio. Or maybe they have an idea for an acquisition. Or maybe they want you to go public much sooner than you want to. So you're gonna have more pressure and basically another person who's saying what you should do with your business. Now, of course, the major benefit there is that you're getting millions and millions of dollars in order to grow your startup company. So being a well-financed startup, your chances are a heck of a lot better than other startups and other competitors out there. That is just the cost of taking on money and how your life is going to change. You now need to take into account this other external factor. So basically, you have a little bit of an idea here now of how crowdfunding differs from venture capital. And I think that there are pros and cons for both of them. If you're doing a early stage tech startup, the next Uber, the next Facebook, the next Dropbox, while you can use equity crowdfunding to get that initial $1 million or under Regulation A+, raise upwards of $50 million, eventually you're going to have to bring in the venture capitalist. You're going to have to, unless you have a very good cash flowing business, you're probably going to have to bring in external financing. So at a certain point, you're going to have to deal with them, and you're going to have to understand what they want out of you and your company. But at the same time, if you're growing more of like an e-commerce business, you don't necessarily need to bring on venture capital dollars. You don't even necessarily need to do a crowdfunding campaign. You can fund the business yourself. This is a very personal decision, and I want you to think a little bit about it and how your life is going to change, how your lifestyle is going to change if you are successful and you raise money in either sort of an environment. So if you like this video, you want more videos like this that I go intensively into raising money, funding, crowdfunding, etc., you can take a second to subscribe to this YouTube channel. And also, if you do have any questions about the things that I said, you can leave a comment down below. Give me a thumbs up if you did like this video. I also have all the different resources that I mentioned in the description of this YouTube video. I want to talk more about early stage startups. I want to help you as you're navigating these terrains and figuring out how to grow your company. And hopefully someday you can come back and say, Sal, you won't believe it, I launched this really successful company, and I would love to come on your podcast and share the story. That's like my wish for you, or what I hope will happen in the future for someone who's listening and watching this video. Again, my name is Salvador Brigman. Hope you enjoyed it, and I'll see you next time.